Hi there, I'm Jane from Wesleyan. So thank you for joining us this evening. We're going to be doing a webinar this evening on planning and how we can help you at Wesleyan. So this evening I've got Rebecca Johnson with me. So I'm Jane and I work within the business development side of Wesleyan. But it's a pleasure to have you with us tonight. I'll pass you over to Rebecca and she can run through the webinar for you this evening.
Thanks, Jane, and good evening, everyone. So just before we start, a couple of things. If you have questions as we're going through, you won't be able to voice them, but you will be able to type them in the chat box on the right-hand side of the screen. So please put them in there. Jane will be monitoring the chat box, and we'll come back to those at the end of the presentation this evening. As Jane said, I'm Rebecca Johnson. I'm a specialist financial planner at Wesleyan. I have been giving financial advice for over 20 years and I work for Wesleyan, the company. So this evening, we'll be talking about business succession and continuity planning. And it's absolutely crucial that we do that. Any successful and future-proof business operation will and should have a view of this. You protect your business against almost every eventuality, so buying cover for your car, buildings, equipment, cyber security and more. But many businesses don't cover their single business biggest asset, and that's the value of the people and the expertise within the business. It goes without saying that people are core to the success of a business, so why is it then that we tend to overlook them? Some of the key questions to ask would be, would you be able to continue trading if you lost one of your partners or directors within the practice? Who would be financially impacted by a partner, director or key employee dying or being unable to work due to illness? And how would you or any of your partners within the practice be affected by the death or illness of one of you, and what would this mean to the longer term viability of the business or the financial impact on the security of your family? So we'll talk about that this evening, and then we'll look at it through two different lenses. One is from a succession planning perspective and the other is from a continuity plan perspective. So there's lots of aspects to the areas today, and I'm just going to pick on a few of them. So as I say, please feel free to put questions in the chat box, but I'll highlight some areas for you to kind of think about and reflect on as we go. What we'll cover today. So we'll be talking about Wesleyan in a little bit more detail. Obviously, as I've already said, protecting your business and liabilities and your key people within the business. And ultimately how we can help you. Wesleyan Financial Services is part of the Wesleyan Group of companies, and Wesleyan Assurance Society has been around for over 180 years, and it's one of the strongest, well, the financially strongest insurance companies in the UK. And that means we've got the ability to deal with any uncertainty in financial markets or the wider economy. You can have confidence that we'll be there for you in years to come. We specialise in working with people like you, and we understand the stages of your career, the complexities of it, such as NHS pensions and business structures, and we're here to support you and help you with your financial decisions that you'll need to make. We're a mutual organisation and we cherish our mutual status, and our integral values are rooted in everything that we do. And this means that we put our members and customers first. We've got no shareholders and we work to benefit those who invest in our business. And again, it's why we're all about you. Another thing that sets us aside from our competitors is our advisory board. And we've got that board made up of leading members of your profession. It's quite rare to see an advisory board within this type of company. And they're here to make sure that we are constantly delivering products and services which are relevant and valuable to you as dental professionals. So how can Wesleyan help? Well, we'll support you with financial advice, products and services throughout your life and career, from your very first steps on the career ladder through to buying your first house, protecting your family and valuables, saving for children's university fees, planning your retirement or leaving an inheritance to your family. We provide personal and commercial financial planning advice because it's essential for any self-employed person to consider these areas in tandem, and this ensures that they're maximising their financial position. You can see on the screen a quick overview of the breadth of the services and products we have on offer for you. So, for example, we've got a comprehensive range of savings and investment products which cover personal and commercial needs from a financial protection perspective. We've got income, mortgage protection, commercial protection, and that for estate planning as well. When we look at mortgages, we've got a whole of market offering with no broker fee for our clients. And then from a retirement and estate planning perspective, we can plan that in advance, or when you're there, we can guide you through that. And we've also got an insurance department who deals with all aspects of any insurance that you would need as a dental professional. So today we'll look at how you should protect the profits and ownership of your business. And I'll be using some examples to help illustrate the points and provide context. And as I go through, think about and reflect on your position, such as your profit levels. So these could be current or expected, or net or gross. What the right work-home balance is for yourselves, and what the impact would be of too much time spent at work. What change would this make to your lifestyle and financial security, and how would this affect future goals such as expansion, early retirement, paying off your mortgage, or the value of the business at the point of sale? I just want to highlight that whilst we'll be looking at the impact of death in isolation today, the very same points could equally apply in the event of illness as well. So let's start by considering how to protect your profits by protecting the key people in your business. So let's start with Tony. He's the top income generator in a practice and brings in 50% of the practice revenue. Tony has long-standing relationships with all of the practice's customers and is well known and trusted in the local community. Additionally, the practice has just taken on a £70,000 business loan from the bank. Now imagine that Tony dies suddenly and unexpectedly, and sadly I'm sure you've all got examples of this happening to someone known to you. Equally, remember this could also apply to unexpected ill health. So what would this mean for the business? Just take the opportunity to reflect on how that might impact. So likely outcomes of Tony's unexpected death would be that profits drop in his absence, the workload of other members of the practice would increase, and locum costs would spiral, assuming a locum could be found. Relationships with key clients could suffer, and they may start looking elsewhere for treatment. It may be that Tony's replacement salary is higher as they had to be brought in at short notice. And business recovery will be slow whilst Tony's replacement gets up to speed. The practice may struggle to maintain loan repayments during the time of instability, and other members of staff may not feel secure in their employment, leading them to look at other job opportunities. So really not an ideal circumstance. When ensuring the profitability of a business, it's not just the main income generator that we also need to think about, but also owners and directors if they're not the main income generator, support staff, development staff, a real overview of the practice as a whole. How many Tonys does your practice have, and what could you really not manage without, or who could you really not manage without? If you were not at work, how would the business suffer? And what would happen to the balance in the remaining partners or directors' lives? You can't stop the worst from happening. You can't prevent people from dying or getting ill, but you can protect against the events that might occur. So let's look at the solution. Going back to Tony again then. So prior to Tony's death, the business undertakes some financial planning and takes out life cover on Tony's life. The business pays for the policy and may even get tax relief on the premiums. And prior to Tony's death, the business continues to increase in profitability, with Tony bringing in the majority of the income and the value of the business increasing as well. Then Tony dies unexpectedly and we see profits drop. But the life cover pays out and provides an injection of funds that supports the profitability of the business, allows loans to be repaid and any unforeseen associated costs met until the business is recovered from the impact of death. As I said, I'm sure you've all got Tonys in your business, or perhaps you're the Tony in your business and want to do something about it. If this is the case, there'll be an opportunity at the end of the meeting to request a time and date to discuss this kind of thing with me. So here we've looked at a key person in your practice, but what about considering the ownership of the business? So in this situation, we're going to meet Sue, Bill and Joe, who are all directors and shareholders in the practice. Each has invested significant time and money in the practice, and the value of their share in it is continuing to grow. If one of them were to die, the others could carry on, although at a reduced turnover. And their spouses or partners may have no interest in the business and no skills to contribute to the practice. In this scenario, Sue has died suddenly. So let's look at the impact. So what happened as a result of Sue's death in this circumstance was that Sue's partner wanted to sell Sue's share of the practice, but neither Bill nor Joe could afford to buy them out, and a third party was sought to buy Sue's share. Sue's partner also started attending meetings with the owners and was pushing for a higher percentage of profits to be paid out to increase his income. So at the same time as dealing with Sue's partner, Bill and Joe had to put more time into the practice to cover the work Sue would have done. Plus, many of the same issues we saw with Tony occurred. Profits were affected, staff were unsettled, and unforeseen costs arose. But if the business structure was a partnership and a similar situation would apply, then what could the situation be? Well, would Sue's next of kin need money rather than a share of the practice? Or would they want to be part of the practice? And then Bill and Joe would be going into business with someone who they hadn't actually anticipated working with. Could the remaining partners afford to buy Sue's share of the practice? And what would happen to Bill and Joe's work-life balance? It may be that if no partnership agreement was in place, then the Partnership Act of 1890 would be invoked, meaning that the partnership would be dissolved and there would be no business following Sue's death. Again, the likely impact is going to be more time spent at work at the very least. And would this be sustainable? And if so, for how long? Wouldn't managing this potential risk be worth considering and talking about? I think that it probably would be wise. So let's look at the solution then. In this circumstance, Bill and Joe have undertaken financial planning prior to Sue's death, and having taken out life cover on Sue's life and each other's lives, Sue then goes on to die. The business shares pass to Sue's partner, and the life cover benefits pay out to the business. Sue's partner has no interest in dentistry and wants to sell the shares, and Bill and Joe are in a position where they've got the money available to buy Sue's shares from her partner. So Sue's partner receives a cash legacy, and Bill and Joe retain control of the business, each with a 50% share. It's also worth considering the risks of death in the situation that you're in as well. So as we know, death is an obvious inevitability for us all, but it's interesting to reflect on a statistical view of the risks. So the risk of death impacting a business increases with the age of the business owner, but also it's affected by the length of time that business owners are likely to be in business together. And as you can see, it's also affected by the number of partners in business. So, for example, where the average age of directors is around 35 and there's 2 of them in business, The likelihood of at least one partner or director dying before the age of 65 is 10%, but that increases considerably where the number of business owners is increased to 10 at 40%, and they've got that extended period of time working together until 65. For the average age of a partner or director at 55, where there's 3 of them in business together, the likelihood is then also 10% because they've got that reduced period of time working together. So 10 years there rather than a lot longer for the younger partners and directors. So I think it's interesting and important to recognise and understand the risk. And of course, here we are just talking about death as well. So some further areas to consider when managing the risk to your business. Have the partners in your practice left instructions or a will regarding their share of the business? And do you know what would happen to each partner's share in the practice if they died? It's important to keep abreast of these things when you're in business with others. Have the risks of not having adequate protection arrangements in place ever been explained to you? And also, do you have a partnership or shareholder agreement in place? These are absolutely essential to making sure that the business remains profitable and appropriate for all of the owners. And if there is, when was the last time it was reviewed, and is it still suitable for needs? Without these important documents, your business and personal and financial position will be compromised. But on the flip side, if you've got these documents in place and you haven't got the financial policies in place to support them, then that also poses a problem as well. So that has just touched on the impact of death, but managing the risks to your business are essential, whether you're a sole trader, a partnership, a limited liability partnership, or a limited company. This is an essential risk to manage. And let's not forget, though, the impact of ill health as well, as I've mentioned a couple of times. This will have similar impacts to death, but it's more likely to occur. And I'm sure you can all identify someone at work that suffered from ill health, whether that's from stress, a car or sporting accident, arthritis, broken bones, or a critical illness such as cancer, stroke, heart attack. It's so important to consider the impact of these on the business and protect against them. And that's why we're here to support you. So to ensure the success of your business, we will work with you to understand your business and meet with you to understand your needs, create a bespoke business plan to mitigate the risk, and put plans in place to ensure what you've worked so hard to build is safeguarded. Once in place, we'll review your plans regularly to ensure your plans remain appropriate for your needs. And again, we've only touched on protecting your business today. There's lots of other areas of financial planning that can be really beneficial for business owners. And so that would all be incorporated in the same review. So let's move on to questions then. Hopefully you've had the opportunity to pop any questions in the question box. But what you can also see here on the screen is a QR code. So if you take the opportunity to use this QR code, then that will direct you straight through to a form which will allow you to request a meeting with myself, whether that be now or in the future is up to you. For those of you who haven't used the QR code before, if you open the camera on your phone and hold it up to the QR code, you'll see a link appear in the middle of the screen. And if you click on that link, it will take you through to the form. So, Jane, have we got any questions from the meeting today?
Hi, Rebecca. Hopefully you can see me again. I just popped up. There you are. So yeah, that was brilliant, Rebecca. Thanks for that. It's a really good webinar, really informative. So I'm hoping all our viewers got some great information there. So yes, we've got a few questions. First one, I'm interested in reviewing my business needs with you. What is the cost for a review, and would it be face-to-face or remote?
Okay, so there are no costs to review. We work on a contingent basis, which means obviously we're a business and we do work on profit basis. But what it does mean is that you don't directly pay for the reviews. In some circumstances you might, but not for what we've spoken about today. The cost is covered within any products that we might recommend to you. So what that means is you can have a review, you can talk to me as many times as you like, and there won't be a cost to you when we're discussing your business protection. Well, you can do that on a Teams meeting or face-to-face. It's very much up to you what you prefer. Some people prefer an evening after work on Teams or a lunchtime is more convenient, and others will prefer meeting at home or at the practice on a face-to-face basis. So we can accommodate any of those options.
Perfect. Okay, got another one here. So it's so my husband is the principal dentist in our practice, and I am the practice manager. I have been concerned for a long time that if he was off sick, for any period of time, then we would be in real trouble, as he is responsible for about 70% of the income our business generates. Is this something you can help with, or if so, how can you help?
Okay, so actually this is a pretty common situation, and yes, I think in this circumstance it's absolutely essential for us to talk, actually, because you know it looks like your husband is supporting probably quite a profitable business and responsible for that, and that could change in a second. So that's something that I can definitely help you with. There's various avenues that we can look at, but certainly considering protection of profits, replacement cover, talking about any business debts you've got as well, and making sure they're not a burden if he was poorly as well. Those are some really key areas to review. So I'd suggest looking into that as soon as possible.
Perfect. Thanks, Rebecca. That's great. That answers that one. So I just got a few more. So I'm thinking about moving my NHS contract into my limited company, and someone mentioned that this could impact the business value if I died. Is this true, and can you help?
So yes, in the first instance, this is true, and yes, we can help. There's, again, various things to consider, various changes in circumstances that occur when incorporating for the first time or when bringing an NHS contract into a limited company. So that is definitely worth a review. There may be benefits that need to be replaced through the business that you would no longer receive from the NHS as well, and it's really important to look at the best way to do that and the most tax efficient way to do that as well. So yes.
Okay, and the last question here, we are a private practice and finding it hard to attract and keep staff. Is there anything you can suggest or any support that you can offer in this area?
Okay, yes, absolutely. So as well as supporting on a one-on-one basis with financial planning advice, we also offer a service where we will come to your practice and talk about anything financial that your colleagues may want to hear about. So through Wesleyan, you can provide additional benefits to your colleagues. So that might be us coming along and talking about a hot topic, whether that is NHS pension, retirement, mortgages, whatever is, whatever your team would like to hear about. We're happy to oblige on that front. But also we can look at reviewing them on a one-to-one basis, so a financial review, so that at the very least we are putting them in a good financial position as well. So if they haven't got the financial worries of you know, things hanging over their head, and they are in a good position, then that's going to mean they're more present at work and they feel that they're getting value from the practice as well. Additionally, you can offer benefits from limited companies for staff as well that we can help you with. So it may be that you would like to arrange some death in service contracts for your employees from your company, and again we can help with that. So there's various ways that we can help your staff to feel like they have value from your practice, and we work with you on that on a one-to-one basis. So again, I'd say reach out, have a chat, and we'll talk to you about all the ways that we can help you and benefit your business.
Perfect. Thanks, Rebecca. That's great. That's great answers to the questions there. That's all we have in the chat box there.
Okay. Well, thanks, Jane. Well, thanks everyone for joining. Thanks so much for your time. And for those who have requested a meeting, the team from Birmingham will be in touch in the next few days. And when it comes through on your phone, you'll see an 0121 number. So it's hopefully not a scam call, and more likely, hopefully our head office contacting you to arrange a meeting.
Thanks, Rebecca. Thanks everyone for joining.
Thank you.
And we'll speak to you soon. Thank you. Have a good evening.
Bye.
Bye.